Hello traders, and welcome to this video where today we'll show you how to use moving averages properly in your trading and the various do's and don'ts with moving averages. So what we'll cover is some mistakes that you should avoid, and we'll also go through how to actually use moving averages in a more accurate way and a couple of good and bad examples. So let's begin. So the first thing to note is that there are many moving averages. They can be on almost any number, but in this case we're going to use the two most popular ones, which are the 50 and the 200, which will be the slower one. That is what most of the traders use, so we'll use that, and we'll use that as a reference. The slow one, the dark blue, is the 200, and the light blue is the 50. So here are the main mistakes that many traders make with moving averages. The first mistake is trading in a range and consolidation. So when you have market movement where the moving averages are all in this sort of spaghetti fashion, crossing over, you do not want to trade that, because that is a ranging, consolidating market that will not move very far. So the mistake that many make is, for example, here the moving averages cross and then they see the market bounce here, so they might take a buy here, and then the moving averages later on cross again and they might take a sell here, and again the market stops you out here and then it stops you out above with your stop loss, and it's very confusing, and this is not the accurate way to place trades. So the second mistake is they're not patient, which is also related to this sort of market movement, and patience is to do with waiting for the EMAs to expand and the trend to start. So EMAs work best when there is a trend direction. So in this case you can see here the EMAs begin to expand out, and we have a trend evolving out of this consolidation period. So patience is required. Third thing is using EMAs as a reason to trade when they're not a reason to enter a trade. They are an indicator which indicates, as the name suggests, where you should be entering. So just placing buy and sell because of the EMAs is not a good idea, because you will have many losses. So you do not want to use EMAs as a reason for entry. And they are there to help you with your entry, to add confirmation and confluence to your trade setup. Alright, so now let's go to the second part, which is how to actually use them accurately. So again, we have this chart. In this case it's a 4-hour time frame, and the market is beginning to trend again after this long consolidation period. We're now having the EMAs expanding. So how do you use the EMAs more accurately? The first thing is you wait for a clear trend and expansion of the EMAs. So as you can see here, we have the expansion, meaning the EMAs begin to create a distance between each other, to expand away from each other, and the trend is forming. We have movement in a clear direction. The EMA is beginning to expand here, as you can see, but it's not a clear trend, since they again began to contract here, as you can see, and the same goes for this period of time where they're just ranging. The same goes for here. You could see they cross over and then they start crossing back over here. Now the second part is to, as we just said earlier, to not use it as a method of entry, but to use it in combination with other indicators and factors in your analysis. So you might have levels, Fibonacci's, trend lines, which will all add strength to your setup and improve the quality of your setup, which will improve your accuracy and of course make you more profitable. So when we say that you should not use it as a reason for entry, what we mean here is, for example, if you were to enter on this candle and say that your strategy would say that when the EMAs expand and the market touches the EMA and creates a particular pattern, we now have a short position with your stop loss above and your take profit somewhere below. And what happens next is, when you just use it on its own, just as a basis for entering, you often have the market might move a little in your favor and then quickly move against you. So in this case, we were lucky because we placed our stop loss above and the market moved in our favor. But if your stop loss was, let's say, above the candle, above the previous high, or just above that, then you would be at risk of being stopped out and having your trade closed only for it to continue going in the correct direction. So the correct, better way to use an EMA is to combine it with levels, fibs, trend lines. So in this case, we can see there is an obvious level here, and you may be drawing a Fibonacci level as a confirmation, and here you may have the 50% fib, and you may be drawing a trend line somewhere here. So what you will have is, instead of this point to enter here, you will actually be looking for the confluence, which is here. And the confluence is the combination where the level meets the trend line and also bouncing off the EMAs. So the EMAs, you can see the market came up, touched the fast EMA, the 50. The 50 was not the level where we looked at, but we were looking for the second part, and the slower EMA, which in this case is a 200, would be the stronger moving resistance. In this case, a place to place your trade would be this area, and in this case it actually touched 200 to the pip really and started reversing. And you also have price action in this area where we have an engulfing candle. So that is where you would have your entry, perhaps below, stop loss above. And as you can see, in this case, the market just never came back. It just moved straight away out of the EMAs in the direction that we expect, and we hit our take profit. If we carry on, and again we see another place where the market hits the EMAs, and it's the same. Let's just delete this for a moment. That was our previous trade. We have the same situation here. Again, just because the market hit the EMA here, it doesn't mean you want to trade, because if you placed just the trade, you would have been stopped out. So in this case, what we want to do is, again, we may have, according to your rules, place the fib. In this case, we have a 61, 62 level, and we may have a trend line and a level, and price action here. We can see a reversal pin bar, and when you have all these things coming together in combination with the trend line, with the moving averages, sorry, and all the other factors, then you may want to place a trade. And let's see what happened there. In this case, our trade started going in our direction eventually. So you can see the market, once it starts trending, it begins to respect the moving averages, and you can use them as a guide for entering. and where you are going to look to place your trade more accurately. So thank you for watching. Hope this video has helped you, and happy trading and good luck.